Hello traders, Jason here with swinghigh.com. It is Friday, January 29th, 2010, and this is your post-market analysis. Well, we had some good numbers come out this morning and the markets looked pretty strong, but then reversed very hard and sold off throughout the day. So here we have the major indexes. The Dow, that's a strange spike up in SPY right now. That's probably in options. Ignore that. The Dow down 0.6%. The financials down about 0.75%. The S&P down over 1%. The Russell's down 1.15%, and the Nasdaq down 1.7%. So some big time selling going on, and actually I'll bring that back up. Some relative weakness in the Nasdaq and the Russells, which is not good to see if you're a bull. So here we have the S&P 500 tracking ETF, the 15-minute chart of SPY. We had a gap up this morning about 0.5% above 109, and then we came up here, failed to test 110, reversed, broke down through 109, filled the gap and then some, made a lower swing high, and then lower swing low into the close, and finished on the lows pretty much. We even came down here, well, we broke down below 108, which is a huge support line that we needed to hold in order to give the bulls any hope right now. And we even came down and tested this 107.20 mark, which is another significant support area. So let's take a look at the daily. As you can see, we have a low base breakdown in the making right here. And we are below a lot of major support areas. The next one we have to break through is 107.20, which we tested today. So I would like to see a break of that, and then expect some support at 105, because it's a nice round number. And then from there it's 103.70. So there's definitely some room to the downside here. And if you'll look at this, we have a couple weeks of selling pressure and a lot of volume stepping in down here. That's significant, and that definitely confirms that the markets want to sell off here. Take a look at some of the other indicators here. We have gold dropping, and it's down 0.5% today, but it's been down, or it's been dropping for a while now, since December. And let's take a look at the dollar. The dollar is also showing some real strength here. We put in a bottom, it seems, in December, and as the gold started to sell off, the dollar started to reverse and increase. Right now, we just broke above some big-time support, or resistance at the 200-day moving average. So I see a lot more upside in the dollar, more downside in gold, and therefore more downside in the markets. Also, for the dollar on the daily chart here, we have a falling wedge breakout and some increase in volume there, so that's confirmed as well. So things are looking very bad, and it's not a time to be going long, that's for sure. Let's take a look at the market internals for today. We had the VIX pop 3.7%, a nice 3 times plus move of the or the inverse move of the major indexes, which is good confirmation. So the index is sold off about 1%, the VIX up over 3% is good confirmation there. Let's take a look at the trend. The trend started out bullish, which makes sense, and then moved into bearish territory. It didn't get too bearish though, really hovered just above neutral for most of the day. The trend Q, wow, very bearish, as the Nasdaq and tech stocks were definitely the leaders to the downside today. So that extreme bearish reading on the trend Q makes a lot of sense. The tick, definitely predominantly bearish for the day. The tick Q, also predominantly bearish. So the market internals are confirming the moves down. We have gold and the dollar also confirming the move down. Earnings are coming out and disappointing. We had good economic report numbers come out today, GDP and investor or consumer sentiment, and even on those good reports we sold off. So what's more important than the economic reports is how the markets react, and if we're selling off to good news, that's not a good sign. Thanks for being a part of swinghigh.com. Have a good weekend, and I'll talk to you later.